In today's video, we're going to be having a look at Jack Ma's Ant Financial. We're also going to be looking at Australian household spending and savings. And from there, we're going to have a quick look at what's going on at the Bank of China and with Chinese banks in general. Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing to take a look at today is at Jack Ma's Ant Financial. The mega company has been moving its way towards an IPO. And at this point, they're looking to raise $30 billion in Shanghai and Hong Kong at their IPO in October. Now, it could fuel another tech rally frenzy. That's what we've been hearing along the lines. But there is a lot more to it than just that. It's putting in a little bit of a table works for them to be competing with Tencent as well. Now, moving on from Jack Ma, we're looking at Australian household spendings and savings. The numbers have been going up and up and up for the savings side of things. The savings ratio is now at 19.8%, which is a 46-year high. And of course, we've also seen household consumption down 12.1% last quarter. So that makes up 56% of the Australian economy, what households spend their money on. Now, whilst they are saving, they're also putting money towards some of the debt that they may have. But more importantly, that savings number is going up there to be a bit of a buffer or at least some level of support for the Australian economy, hopefully further down the track when we do see some consumer spend back up. Now, of course, this is a good sign, but something to keep in mind with it all is that we are still seeing consumer spending numbers sitting stable at the moment at about 1% and a little bit higher. So that means that there is some level of appetite still there for households to be spending their cash when they have it. Now, looking at the Bank of China, profits have declined at the fastest pace in the last decade. 10% minimum falls in the first half of this year in profits, and of course, for the year's expectations, we're expecting somewhere between 20 and 25% falls in profits. That's not just for the Bank of China, that's for all of the big ones there and many of the other smaller sized banking entities based out of China. The bad debt has also hit record highs, and banking capital buffers are contracting at a very fast pace. And it's making it very difficult for them to build that buffer back up. So naturally, there is a little bit of concern, and there are a lot of people looking at that catalyst right now with more than 45% of banks running into problems. So let's keep an eye on that situation quite closely to see how we can monitor it moving ahead, especially when we consider the Chinese stock market at the moment. Now, moving on to oil. This is one I've just picked up on. There's really only three little pieces of information here that I thought was relevant for the price of oil as a whole. They do all come from very separate areas. Now, the first one is that Iraq is planning to request an extension on the OPEC cuts they've just had. They've cited reasons that they're not able to shut down their factories and refineries as fast as they thought they could, and so therefore they're going to be making more anyway, they think. But at this stage, it's still just an unconfirmed report or a rumor. It has not got any weighting to it yet, but we will probably hear more if it goes to OPEC. Now, the other one to look at here is that Aramco is looking at delaying a new refinery expansion they were planning. Obviously, with the global shutdown and of course the reduced demand for oil and oil-based products, refineries do not need to be operating at full capacity. So an expansion now would be unwise. In addition to all of that, the weekly inventory numbers for oil in the US has declined for the sixth straight week in a row, with this week showing more than 9 million barrels lower than what they had in the week before. Now, of course, this would usually indicate that we're likely to see a rise in oil prices, but in fact, with all of the three of these items in together, we've actually seen a decline. WTI dropped nearly $2, it was close to about $1.40, $1.50 in its drop in value. So we will have to keep an eye on oil because we might still yet to be seeing any more air travel and or increase in demand. But we don't know how that's going to go, especially with all of the coronavirus cases that we're currently seeing in the US. Now, really, that's all I've got for you today. So to have a look at the news ahead, we have Spanish, Italian, French, and German PMIs all coming out relatively close at the similar sort of timing. So keep an eye on that, particularly if you're trading euro. Now, obviously, just individually on their own, they usually don't account for too much, but purchasing managers indexes, especially when we get them for the Eurozone, when they get released like this, might contribute to something a little bit more haphazard on the market. Now, of course, from there, we also have Spanish and French 10-year bond results. And then from there, we're moving on to US unemployment figures ahead of NFP tomorrow and trade balance figures for Canada tonight. Of course, we've then got Bank of England Governor Bailey speaking again. I think this is probably the second or third night in a row we've been hearing from Governor Bailey. His impacts have not been all that much, and we haven't seen too much action around his speeches at the moment, but it's always good to keep a close eye on them. Much later in the session, we will be having non-manufacturing PMIs coming out of the US as well. So that's something to watch for if you're trading any of the dollar pairs tonight. Now, if there's any questions from today's video, perhaps you've got a question or you'd like to get in contact with me, please feel free to shoot me an email at talk2al@acy.com. And don't forget to like and subscribe to this video so you get more great content from me and ACY Securities in the future. Have a great trading day ahead.